Payroll funding companies often verify invoices with the customer accounts before funding them. This is done to confirm that the invoices were received and that all of the information is correct. Though comforting to funding companies, simple verification does not guarantee that the invoices will be paid in full. Nevertheless, many funding companies will advance funds against the invoices. There are circumstances, however, where a funding company will perceive higher risk and need a higher level of assurance that the invoices will be paid in full, on time, without deductions, offsets, disputes, or credits. This higher level of verification is called an Estoppel letter or no offset letter. The primary basis upon which any customer debtor is obligated to pay you is a contract which spells out what is expected and what is owed. If the customer doesn't pay, the supplier and its financing company typically has claims against the account for breach of contract. Unfortunately, in some cases, disputes arise. For instance, in technology and consulting businesses, projects may be done in phases, and completion is predicated upon another stage of work. A funding company Estoppel letter creates a separate recovery right over and above a contract claim. Estoppel letters are useful, but they can have limitations. For one thing, the person binding the company to an Estoppel letter may not have authority to make that kind of deal. Also, the letters are somewhat formal, and an account debtor may feel the need to bring in their attorney. Some companies don't like the idea of legal expense on top of a promise to pay. There is a lighter form of estoppel called quasi-estoppel. First, the funding company calls or emails the customer account debtor as an ordinary course of business verification of the invoices. A follow-up email is the key. It's in plain language and does not contain legalese. Here's an example. Dear Freddie, this will confirm that the consulting work for project number 342 was performed and completed by IOT Technical Staffing at your firm on April 21, 2015. That everything is in good order and that the payment for invoice number 419 will be processed by May 20, 2015. Based upon our discussion, we will fund our client for the amount of the billing and look forward to receipt of the payment. The aim of a quasi-estoppel is to set it up so that if the collection matter ever gets to court, the focus is on how and why the funding company relied on the account debtor customer's assurance that they would pay. A quasi-estoppel may not always be as effective in court as a full estoppel, but it still has value. One obstacle to getting full-fledged estoppel letters signed is that they may seem more legally threatening. The less formal quasi-estoppel might fly under the radar. When the follow-up communication is delivered, the customer may let the funding company know that there is a problem with paying the full amount, which needs to be known anyway. Generally, estoppel or reliance claims are not the type that can be thrown out by the court before a trial. Adding an estoppel claim on top of a contract or collection claim may get the funding company a higher settlement, a lower loss, or possibly even a win in court. For more detailed information about estoppel letters, see the article on our website at www.flexiblefund.com.